We got a deeper insight into what the Fed was discussing at their July FOMC meeting. It is Wednesday, August the 20th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, also share with friends, family, or colleagues. But we wanted to come to you today to give a little bit more insight into the minutes that we received from the end of July Federal Reserve meeting. And typically the Fed comes out with a statement and a press conference immediately following their meeting, but it takes several weeks before we get the full transcript. And this sometimes is a market mover, sometimes it's not. What we do is we look within those details, especially when we have Federal Reserve officials that dissented or disagreed with the decision that came out of the committee. And remember, at that meeting, we had two committee members that dissented on keeping interest rates unchanged. They wanted to cut interest rates. So we wanted to see, what did all the other members say? What was important to them? And when you look through these minutes, what it's telling us is that this Fed is not as dovish as the market wants it to be. And I say want it to be because this market has been rising here, hitting fresh record highs since that meeting with the anticipation that the Fed's definitely going to cut interest rates in September. Well, in this business, nothing is definitive. And what we saw is those committee members that didn't dissent are very concerned about inflation. Let's just talk a little bit about a majority of the participants in this comment said a majority of the participants judge the upside risk to inflation as the greater of the two risks being between the labor market and inflation. Many members discussed the fact that they don't know what the tariff implications will be, and they're a little bit more concerned about inflation than all these headlines are telling us. So what does this mean? First of all, the September meeting is still several weeks away, and we will get plenty more from an inflation standpoint. We'll also get another labor market report. These two things will be very important to decide if the Fed does cut interest rates in December or if they push it off to another month or two. We're still on the fence. I know the market's priced it in. It's about an 80 to 90% chance they will cut interest rates in September, but the Fed is walking that very fine line. We won't see tariff impacts until towards the end of this year, specifically the ones that went into effect August 1st. It takes time for that. And last time I checked, the inflation data that we've received since this meeting have been good. Some of it's a little bit better than expectations, but looking on a year-over-year basis, we still have core inflation at the consumer level rising 3.1%. That's well above the Fed's target, and it's up from about 2.8%, which we saw that recent low here earlier this year. So inflation, we're not out of the woods. Don't get too excited about the fact that the Fed can come in and save the day come September. This is all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.